Good evening, everyone. I am C. Deepika Gudgutia, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be a moderator for the webinar on common errors in financial statements and nuisance in deduction allowable under Section 43BH of IT Act. In a short while, we will start this webinar. First, I would like to apprise about CPE committee. The role of a chartered accountant is evolving continuously to accept newer responsibility in a dynamic global environment. The future of CA profession depends on being flexible and open to innovation. Therefore, the need of the hour is to innovate as per the requisites of the contemporary business environment and accordingly upgrade the curriculum and education system of chartered accountancy course. The committee also believes that members of ICAI should look beyond the traditional areas of practice and explore new areas of business and profession, and hence the CPE committee is mentoring the members by providing guidance through various workshops, seminars, national conferences, background materials, etc. Simultaneously, by encouraging young and dynamic professionals to grow as speaker or master of ceremonies in CPE programs. The program of this evening is as follows. We will have two sessions of 1 hour each, and the topics are common non-compliance on AS observed by FRRB and controversies in respect of deductions allowable under Section 43BH of Income Tax Act. Before we move further, let me introduce to you our Vice Chairman of Committee, CA Gagan Chandra Mishra. Sir is a CPE committee, a Vice Chairman of CPE Committee and Chairman of Committee on Insolvency and Bankruptcy of ICAI. Presently, he is serving as Central Council member and he has more than 24 years of professional standing to his credit as an established chartered accountant. Under his vision, this year, CPE committee taking new initiatives for member. I, on behalf of everyone, welcome you, sir, and I would request you to please address our members.
Thank you so much, Deepika. Very respected chairman of the committee, C.A. Purushottam Khandelwal ji. So friends, Khandelwal sir is a good friend of mine, and what I have witnessed in last 2 years in the council, that he is very dedicated professional who is working round the clock for the profession, not only in CPE committee, but more precisely in the best interest of the members and students at large, whatever the committee might be. So, respected Purushottam bhai, Deepika madam, who is moderator of today's program, two very learned speakers of today's program, C.A. Paras Chadha ji and C.A. Sulabh Padshah ji, and of course the secretariat of the committee, and all respected participants. Good evening to one and all. Friends, we all know that on every Wednesday from 4 to 6 p.m., the CPE committee organizes 2 hours program for the knowledge dissemination and learning for the members on 2 topics, 1 hour each. And both the 2 topics has been discussed over here. Is being tried to be unique topics which could be in the best interest of the members at large. Hence, this CPE in itself is one of the regulatory committee, and not only regulatory, the most importantly, the CPE has tried that members get themselves updated and abreast with the latest information, latest changes, and most importantly, the rules and bylaws which are impacting the profession along with the technology that to be adopted for the members at large. Artificial intelligence is one of the vital change that we people are witnessing in this era, and in coming time the day is not far ahead when most of the audits and most of the accounting and compliance services shall be directly done by the artificial intelligence. So time has come when we have to certainly find out the newer areas and niche areas of the practice which is going to be open the global platform in coming time. So friends, let's perceive the future. And the future is that we have to come out of the compliance part. And we have to see the newer areas of the practice like insolvency, bankruptcy, sustainability, forensic audit, and most importantly, the India is going to be global hub for accounting in coming time. So how we can grab the newer opportunity and how we can update ourselves to not only have the best of the professional skepticism, but to also develop the best of the professional ethics and values in order to deliver the best to the society at large. So thank you, Deepika, for very generous introduction. And since Chairman sir is here, I'll not speak much, and we have to listen. Purushottam Bhai, I'm really thankful to one and all for patient listening, and I'm thankful to both the speakers who are going to deliver on two very important topics today. One, the common deficiencies in the financial statements, and other one with respect to the 43BH. So these two are very important topics. So the participants who have joined, I hope that they will certainly have takeaway for their home, and they will certainly enrich their knowledge and skill with the deliberation of the speakers. Thank you very much, Deepika. And now I think that you please introduce my brother Purushottam ji, and we will listen to you.
Thank you so much, sir. Thank you for addressing our members and enlightening them. And as rightly said by you, this session cannot be fulfilled without listening to our chairman of the committee, CA Purushottam Khandilwal, sir. He is chairman of CPE committee and governor of RBA Directorate of ICAI. He is having 25 years post-qualification experience in the field of audit, direct and indirect taxes, and intellectual property rights. This year, he is devoted to fortifying CPE framework and guaranteeing quality across its entire operational spectrum. And this major focus would be on upgrading of CPE portal for enhancement of the branding and professional competency of members. I welcome you, sir, and I request you to please address our members.
Good afternoon, a respected Vice Chairman, my counseling colleague and dear friend CA Gyan Chandji Misra, who is always available to members and students, the person who are the only instrumental in organizing international conference of ICA for the first time in the history of ICA last year at Singapore. So there is a known for the innovative thoughts, always a good mentors. These always based helping to the design for program of member at large on the every Wednesday. Thank you, Gyan, by being a vice chairman of this committee. Deepika Gudkadiya ji, a vice chairperson of the entry point of Gujarat, Vapi, a learned faculty, a Paraji, and Sulabh Asha. It gives immense pleasure to me amongst you on this programs. The program designed by a CP committee is very relevant for the members at large because we come to our knowledge that there is a common mistake for whenever you prepare the financial statement. So Paraji today is here to guide you what care you should take when you are preparing a financial statement. And another topic which is selected for this program is 43BH. Sulabh Asa is also from Ahmedabad. He's a very learned faculty. He worked with the Talati and Talati for longer period. I've seen when he passed the C and thereafter he is working with the Talati and Talati. Now he started his independent practice, but is a very learned fellow. This year, my committee has done a lot of work across the country. So I will not take much of time because I have to attend another program. I just stop my cars to attend the program. So I will not come between the faculty and the participants. So I wish you all the best for the success of program. Thank you so much. Thank you, Gyan Bhai.
Thank you,
Thank you,
Purushottam
sir.
Bhai. Just one announcement
Ji.
that like the yesterday year, we did one international convention on insolvency and bankruptcy in
Yes.
Singapore. This year, we are doing this program in Delhi, in Bharat Mandapam, on
Yes.
12th and 13th of July 2024. We'll request the members to kindly visit the website of Resolve 2024 and get yourself registered in this unique program, which is going to, again, one of the wonderful event in the arena of the insolvency in the country. So this is just by information of the members. You please register yourself.
Okay, sure, sure.
Thank you, sir.
Thank you so much, sir. Let's move forward with our session. And before we do that, let me take this opportunity to introduce our first faculty, CA Parash Kumar Chadda. He has more than 12 years of experience in GAAP conversion, that is from AS to Ind AS or IFRS or US GAAP, review of AS and Ind AS standalone and consolidated balance sheets. He is registered as a technical reviewer in a panel of FRRB and research committee of ICAI. He has been conducting various training sessions on accounting and auditing topics such as business combinations, consolidations, and revenue recognitions. I welcome you, sir, on behalf of the committee, and the stage is yours.
Thank you so much, Deepika. First of all, I would like to thank Chairman Sir and Vice Chairman Sir for giving me this opportunity. Now let's get started. Please let me know, is my screen visible?
Yes, sir.
Okay. So as you can see on the screen that our today's first topic is common non-compliances on AS observed by FRRB. So FRRB has issued lots of observations, but all those observations cannot be discussed during a short period of 1 hour. So what I have done, I have compiled almost 24 observations, which we will be discussing in next couple of minutes, right? But before directly jumping into the observation slides, let me explain you what is FRRB and why it was constituted and how does it work, right? So FRRB was constituted in July 2002 by ICI with an objective to review general purpose financial statements of the enterprises and auditors report thereon with a view to determine compliance with the generally accepted accounting principles in the preparation and presentation of financial statements. So we all know that accounting principles are nothing but the rules which have been mentioned under AS and Ind AS. Second, to determine compliance with the disclosure requirements, means all the disclosures which are required to be disclosed in the financial statements have been disclosed correctly or not. And third, to check the compliance with the reporting obligations of the auditor, means whether the auditors are issuing their audit report as per the applicable reporting framework or not. And what are the applicable reporting framework? It could be standard of auditing, it could be CARO, it could be IFC report, and so on. Now, what is the selection criteria of the enterprises, right? So enterprises can be selected by FRRB on suo motu basis. This is the first criteria. Second, enterprises referred to FRRB by any regulatory body like RBI, SEBI, MCA, IRDA, etc. And third one is that enterprises where serious irregularities have been highlighted by the media reports. So any of the criteria can be implemented or can be applied to select the case for its review by FRRB. Now, what is the review mechanism? There is a 3-level review process. Level 1 review will be conducted by a technical reviewer like me. and observation report of the technical reviewer will be submitted to the FRRG, that is Financial Review Reporting Group. Then second level review will be conducted by FRRG to check whether all the potential observations which should have been identified by the technical reviewer have been identified or not. And after that, it will submit its report to FRRB, that is Financial Review Reporting Board. And the third and final level review will be conducted by FRRB. Now, once review process gets completed, what is the action which is required to be taken by FRRB? So, if material non-compliances are identified which may affect the true and fair view of the financial statements, then in this scenario against the auditor, the case will be referred to the director discipline, right? And against the enterprises, such irregularities will be informed to the regulatory body relevant to the enterprises. Means in case of listed entities, such irregularities will be informed to SEBI. In case of insurance companies, such irregularities will be informed to IRDA. In case of unlisted companies, such irregularities will be informed to MCA. On the other hand, if non-compliances have been identified, but such non-compliances are not material, which may affect the true and fair view of the financial statements. So under this scenario, an advisory will be issued to the auditor. And such irregularities will also be informed to the peer review board so that it may accordingly be considered during the peer review. Means peer review, while doing its review, can keep these observations in its mind, right? Next, this is the glance of the non-compliances observed by FRRB. Now, as you guys can see on the screen, out of 100%, 18% observations have been identified regarding the non-compliances of Companies Act. So lots of observations have been identified by FRRB regarding the non-compliances of Companies Act. After that, 8.1% observations have been identified with respect to provisions of AS3. So हम लोग क्या सोचते हैं, कैश फ्लो स्टेटमेंट मैच हो गया, काम खत्म. But ऐसा नहीं है. We guys are required to check whether all the items have been correctly classified under the category operating activities, investing activities, and financing activities. Third, 7.6% observations have been identified with respect to CARO reporting, right? So this is just the glance. Now we will discuss all the observations which I have compiled for you. So first observation pertains to AS1, which is disclosure of accounting policies. Now, what is happening in this case? Certain companies omitted to disclose significant accounting policies with regard to the following: borrowing cost, valuation of inventories, accounting for investment, employee benefits, accounting for taxes on income, impairment of assets, and provisions, contingent liabilities, and contingent assets. Means the companies had entered into the transactions of such items, but they have not disclosed the accounting policies with respect to these items. So if you will read the provisions of para 24 of AS1, it says that all significant accounting policies adopted in the preparation and presentation of financial statements should be disclosed, but the same have not been disclosed. And hence, this is the observation which has been highlighted by FRRB. Correct? This is the non-compliance of AS1. Second observation pertains to AS2, that is inventories. From the annual reports of some companies, following accounting policies have been noted. Means few companies have mentioned this accounting policy in their financial statements, and few companies have mentioned this accounting policy in their financial statement. Now, what are these accounting policies? Under scenario 1, inventories are stated at lower of cost and net realizable value. Cost is determined on weighted average or FIFO basis as considered appropriate by the company. These words have been entered in the accounting policy of the company, that as considered appropriate by the company. means there is no crystal clear accounting policy whether the company is using weighted average method or FIFO method, correct? Under scenario number 2, cost of inventories is computed on the weighted average FIFO basis. Again, there is no crystal clear accounting policy. Further, if you will read the para 16 of AS2, it says that cost of inventories should be assigned using FIFO or weighted average method. We are okay with it. Further, it is saying the formula used should reflect the fair possible approximation to the cost incurred in bringing the inventory to their present location and conditions. Means all the cost which the company is incurring to bring the inventory to their present location and condition must be disclosed, but the same disclosures have not been made by the company. And this is the observation. Although cost formula has been given in these cases, however, it would be more appropriate to disclose which cost formula has been used for which class of inventories. Means for raw material, for WIP, for finished goods, for byproduct, for trading item, which for cost formula is being used for which item, it should be clearly mentioned. So again, this is the observation. This is the non-compliance of AS2. Next observation pertains to AS3, which is cash flow statement. From the note on the non-current investment and its footnote, it has been observed during the year that a company has acquired all the equity shares in 3 companies. Means 100% acquisition has been made by the company. In other words, we can say wholly owned subsidiary companies have been acquired. It was further noted that from the cash flow statement, difference between the opening and closing balance of investment in subsidiaries have been shown as purchase of investment. Means instead of disclosing investment in subsidiaries, the word purchase of investments has been disclosed. And there was no indication on the sale of investment, right? There was no indication of the sale of investment. Now, if you will read the provisions of para 37 of AS3, it clearly says that acquisition and disposal of subsidiaries or other business units should be presented separately. So there are 2 observations here. Under observation number 1, the investment should have been disclosed as purchase of subsidiaries or the acquisition of subsidiaries. But what the company has done, company has shown it as purchase of investment. Second observation, the difference between the opening and closing balance, that is the movement, have been shown as purchase of investment. So what is happening in this case? Net balance is being disclosed, or you can say netting off is being done in the cash flow statement, and sale of investment has not been disclosed. So this is the observation which has been highlighted by FRRB, and netting off is not allowed as per the provisions of AS3. Next scenario, in the cash flow statement of a non-financial enterprises, under the heading financing activities, interest income amounting to rupees so and so has been disclosed, right? Again, netting off is being done by the company, which is not allowed. So para 30 of AS3 clearly states that if you are receiving any interest, then such interest should be disclosed under the heading cash flow from investing activities. On the other hand, if you are paying any interest during the year, then such interest should be disclosed under the heading cash flow from financing activities. But netting off is not allowed. I am repeating again, netting off is not allowed. So this is the observation. Company has done the netting off of the transaction, which is not allowed. Next observation. Certain companies, although are disclosing dividend paid under the heading cash flow from financing activities, but tax paid on dividend, that is corporate dividend tax, have been disclosed under the heading cash flow from operating activities. So para 34 of AS3 says that cash flows arising from taxes on income should be separately disclosed and should be classified as cash flow from operating activities unless they can be specifically identified with financing and investing activities. So what is happening here? Tax expense can be clearly identified because it is pertaining to payment of dividend. And since payment of dividend has been shown under the heading cash flow from financing, and hence tax paid on dividend should have been shown under the same heading. But corporate dividend tax has been shown under the heading cash flow from operating activities, right? So this is the observation. We can discuss one more example here. Let's assume during the year you have sold any property, right? And this property is required to be disclosed under the heading cash flow from investing activities. Now, as per the provisions of Income Tax Act, you guys might be required to pay capital gain tax on the sale of such property, correct? Now, such capital gain tax should be disclosed under the same heading, that is cash flow from investing activities, and not under the heading cash flow from operating activities. So what is the crux here? Jahan dard hai wahi dawa hai. Please always remember my words. Jahan dard hai wahi dawa hai means where you are disclosing the underlying transactions, tax pertaining to such transaction is required to be disclosed under the same heading, right? This is the observation. Next observation, in one of the non-financial enterprises, increase or decrease in the long-term loans and advances has been adjusted as working capital changes under the heading cash flow from operating activities. We are talking about the non-financial enterprises. That is the normal company and not the NBFC, right? Long-term loans and advances given has been adjusted against working capital changes. Further, cash flow arising from the same have been shown on net basis in the cash flow statement. So again, there are two observations here. First observation is that netting off is being done, which is not allowed as per the provisions of AS3. Second observation is that since the company is not a NBFC company, and hence this long-term loans and advances paid should be considered as or should be disclosed under the heading cash flow from investing activities and not under the heading cash flow from operating activity. So this is the observation which has been highlighted by FRRB. Next observation, from the notes to the accounts given in the annual reports of some companies, the following has been noted. The provision for doubtful debts, advances written off, unrealized foreign exchange gain or loss has been reported in the statement of profit and loss, right? Para 20 of AS3 clearly states that net cash flow from operating activities is determined by adjusting the net profit or loss for the effects of non-cash items such as depreciation, provisions, deferred taxes, unrealized foreign exchange gains or loss. Means while you are calculating the cash flow from operating activities, all the non-cash items which you have debited or credited in the statement or profit and loss account, these items are required to be either added or deducted as the case may be, depending on the circumstances, right? So non-cash items should be adjusted while calculating the cash flow from operating activities. So this is the non-compliance which has been identified. Next observation. Next observation pertains to AS4, that is contingencies and events occurring after the balance sheet date. What is happening in this case? One of the notes to accounts states that it is the company's policy to take into account the impact of significant event that occurs after the balance sheet date but before the finalization of accounts. Please pay attention here, before the finalization of accounts. Now, if you will read the provisions of AS4, there is no such kind of terminology which has been used by the standard. The standard clearly says that all the events, whether favorable or unfavorable, that occur between the balance sheet date and the date on which financial statements are approved by the board of directors should be considered. But what is happening in this case? Company is considering the events that is occurring between the balance sheet date and the before the finalization of accounts. So let's take one example. Suppose accounts have been finalized on 18th of May. Okay. And board of directors are approving the financial statements on 10th June, for example, right? Now the company is required to consider all the events that has taken place till 10th June and not till the date of 18th May, right? So finalization of accounts has no relevance for the purpose of AS4. So this is the observation. Next observation pertains to AS9, which is revenue recognition. From the annual reports of some companies, it has been noted that one of the items of income as shown in the statement of profit and loss is income from advertisement and ticket sales. And related accounting policies states as follows. Revenue from sale of tickets is recognized when tickets have been sold. When tickets have been sold, revenue is being recognized at this point in time, correct? Second scenario, advertisement revenue is recognized when advertisements and net realizations are confirmed. Net realizations are confirmed. Now, what are the provisions of AS9? It says that in case of dispatch of goods, in case of sale of goods, revenue should be recognized when all the risk and rewards have been transferred, correct? And in case of rendering of services, when the performance obligation is completed, then you can recognize the revenue by using completed service contract method or proportionate completion method. And there is one more criteria for recognizing the revenue. It should be reasonably certain that ultimate collection of the revenue will be made. Now let's again discuss all these two scenarios. Under scenario number 1, revenue from sale of ticket is recognized when the tickets have been sold. Now it might be possible that event doesn't take place, right? And if event doesn't take place, in that scenario, company would be required to refund the amount to the customers, right? Because event has not taken place and hence company will be required to pay the refund to the customers. So under this scenario, revenue is being recognized early by the company. Company is early recognizing the revenue in its books of account. What is scenario 2? And advertisement revenue is recognized when advertisement and net realizations are confirmed, and the standard says it should be reasonably certain that ultimate collection will be made. There is no requirement to wait until net realizations are confirmed by the customers. So under scenario number 2, companies postponing the recognition of revenue, right? There is no logic to wait until such realizations are confirmed by the customer. When it is reasonably certain that ultimate collection of revenue will be made, you can recognize the revenue. So this is the observation which has been highlighted. Next case, from the annual report of a company, it has been noted that company has recognized as income the entire cost of garments destroyed by the fire under operating income. Please pay attention here. Revenue is being recognized under the heading revenue from operation, right? And basis or based on the filing of insurance claims. Further, insurance claim against loss of fixed assets has also been recognized based on the claim filed with the insurance company. The note further states that the said income has been recognized as per the provisions of AS9, means insurance income is being recognized as per the provisions of AS9. And para 4.1 of AS9 clearly states that revenue is the gross inflow of cash, receivables, and other considerations arising in the ordinary activities, arising in the ordinary course of activities of the enterprise from sale of goods, from rendering of services, and it includes interest, royalties, and dividends. Insurance income cannot be recognized as per the provisions of AS 9. It is other income and not the revenue from operation, right? And it should be reasonably certain that ultimate collection of the revenue will be made. But the company has recognized the revenue in its books of account on the basis of filing of claim. Now, it might be possible that insurance company may reject the insurance claim, right? So again, the company is recognizing the revenue at this point in time, which should not be the scenario. So these two observations have been identified. Next observation pertains to AS 11. That is the facts of changes in foreign exchange rates. Now, what is happening in this case? From the notes to accounts given in the annual report of a company, it was noted that certain foreign exchange transactions have been entered during the year, but not disclosed in the statement of profit and loss accounts. So, para 40A of AS 11 says that an enterprise should disclose the amount of exchange difference included in the net profit or loss for the period. Means if any company or any enterprise has entered into any transaction of forex during the year, then forex gain or loss must be disclosed in the statement of profit and loss. Correct? So this is the observation which has been identified. Next observation pertains to custom rate considered. So what is happening in this case? From the accounting policy given in the annual report of a company, it was noted export sales have been recorded at a rate notified by the customs for invoice purposes, right? So as per the provisions of AS 11, forex or you can say the foreign transaction should be reinstated or should be translated considering the exchange rate at the date of transaction. So custom rates you cannot take for the purpose of translation of any foreign amount into INR. This is the rate which has been identified by custom authorities for their own documentation, right? You guys are required to consider the rate of the date of transaction, means the exchange rate which is prevailing on the date of transaction. And generally, RBI rate is considered for the purpose of translation, right? So this is the, again, one of the observation which has been highlighted by FRRB. Next observation. It was observed from the accounting policy given in the financial statement of a company that current assets and liabilities as at the end of the year are translated at exchange rate ruling on the date of balance sheet. If you will read the para 11A of AS 11, it says that monetary items should be reinstated or reported using the closing rate, right? Only monetary items are required to be reinstated using the closing rate of the reporting date, correct? You cannot reinstate all the current assets and current liabilities, which may include non-monetary items as well. Now, what is the difference between monetary items and non-monetary items? Monetary items are those items which require settlement in cash. For example, trade receivable, trade payable. On the other hand, non-monetary items are those items which require settlement, which do not require settlement in cash. For example, inventory, for example, PPE, that is fixed asset, right? So only monetary items are required to be translated using the closing rate of the reporting date, correct? So this is the observation. Next point. In the annual report of a company, accounting policy for foreign currency transactions for monetary items have been disclosed. Now, under this scenario, accounting policy with respect to monetary items have been disclosed, but for non-monetary items, it has not been disclosed, right? So this is the observation that company omitted to disclose the policy for non-monetary items such as investment in equity shares, inventory, fixed assets, which were presented in the balance sheet. Means the company were having the non-monetary items, but accounting policy with respect to the same has not been disclosed. Right? Next case study, and this is the very important case study. Before reading the case study, let me explain you what is the para 46A. So when there were financial crises in 2008, right, many companies started to incur foreign exchange loss, and that foreign exchange loss was required to be charged in the profit and loss account on upfront basis, right? Deferment of such forex gain or loss was not allowed. So what happened? Many companies filed appeal with the MCA, and MCA heard, and new para, that is para 46A, was introduced under AS 11 with effect from 1st of April 2011. Under this, a revocable option was given to the companies. Now, what is the irrevocable option? If any company has obtained long-term foreign currency monetary items, that is long-term loan, nothing else. If any company is having long-term foreign currency monetary items, which has been taken for the purpose of acquisition of depreciable assets, right? Then forex gain or loss can be added or it can be deducted from the cost of the asset. Means companies can capitalize this forex gain or loss as the case may be. It can charge to the cost of the asset instead of charging directly in the statement of profit and loss account. On the other hand, if the company is having long-term foreign currency monetary items, that is long-term foreign currency loan, and it has been taken for any other purpose, means the purpose other than purchase of depreciable asset, then such forex gain or loss can be accumulated in a foreign currency monetary item translation difference account, and it is commonly known as FCMI TD account, right? Right. And under this scenario, the company can capitalize the cost and it can amortize the balance over the balance period of the loan, right? This is the scenario. Means long-term foreign currency loan must be there in the balance sheet to capitalize foreign exchange gain or loss, as the case may be. Correct? Now, what is the case here? In the accounting policy of foreign exchange, it was noted that if foreign exchange transactions relates to acquisition of fixed assets, they are adjusted to the carrying cost of such assets. I am repeating myself. If foreign exchange transactions relates to acquisition of fixed assets, they are adjusted to the carrying cost of such assets. Now, what is happening in this case? Company has purchased fixed assets on credit terms, means creditor for capital goods existing in the balance sheet rather than long-term foreign currency loan. And the company has reinstated such creditor for capital goods since it is a monetary item, and company is capitalizing the forex gain or loss, as the case may be, to the cost of fixed assets. It is not allowed. It is not allowed as per the para 46A of AS 11. It is the non-compliance which has been identified. Until and unless the company is having long-term foreign currency loan, you cannot, or the company cannot capitalize such forex gain or loss on reinstatement. Correct? So this is the scenario. I hope you guys are able to understand this query clearly. Next observation pertains to AS 16, that is borrowing cost. Now, what is happening in this case? Restructuring charges which had been paid to extinguish high cost debt were written off over the tenure of fresh loan taken for refinancing such high cost debt. I am again repeating the sentence. Restructuring charges which had been paid to extinguish high cost debt were written off over the tenure of the fresh loan taken for refinancing such high cost debt. Now, if you will read the provisions of AS 16, it says borrowing costs are the interest and other costs which is being incurred in connection with the borrowing of funds, right? Further, borrowing costs that are directly attributable to the acquisition, construction, or production of a qualifying asset should be capitalized as part of the cost of asset. Means if you have taken any loan for the purpose of acquisition, construction, or production of a qualifying asset, and you are paying interest or any other charges, then you can capitalize. Correct? Now, you guys will ask, what is qualifying asset? So qualifying asset is an asset which takes substantial period of time to get ready for its intended use. Now, you will ask, what is substantial period of time? So AS says, if any asset is taking 12 months or more to get ready for its intended use, then you can say substantial period of time is there, right? What is happening in this case? The company is paying restructuring charges for the purpose of extinguishing high cost debt and not for the purpose of acquisition or construction or a production of a qualifying asset. And hence, company cannot capitalize such borrowing cost to the cost of a qualifying asset. This is not allowed. This is the non-compliance of AS 16. Correct? Until and unless you have acquired or you have obtained the loan for the purpose of acquisition, construction of a qualifying asset, until then you cannot capitalize the borrowing cost. Correct? Next observation pertains to AS 17. In the financial statements of a company, neither the statement of significant accounting policies contain any accounting policy on segment reporting, nor contain any segment information. Means neither in the accounting policy nor in the notes to accounts any information regarding segment information has been given, right? If you will read para 38 of AS 17, read with explanation thereof, it says that if it is concluded there is neither more than one business segment nor more than one geographical segment, then segment information as per this standard is not required. Correct? Not required to be disclosed. However, the fact that there is one business segment and geographical segment is disclosed by way of note. But what is happening in the above case? Neither the accounting policy nor the notes to account disclosing such information that the company is dealing only in one business segment and geographical segment. So this is the non-compliance. If any company is having only one business and geographical segment, then under this scenario, segment information is not required in the notes to accounts, but such facts should be disclosed in the notes to accounts that company is dealing or company is having only one business and geographical segment. So this is the observation. Next observation pertains to AS 18, that is related party disclosure. From the related party disclosure given in the annual report of some companies, it was observed the names of related parties as well as transactions that have taken place with such related parties have been disclosed, but the nature of relationship with them has not been disclosed. This is scenario number one. Second scenario is that few companies have mentioned the phrase other related parties in their related party transaction note. Correct? And AS 18 says that the reporting enterprises should disclose description of the relationship between the parties. Should disclose the description of relationship, means whether the other company is your subsidiary, associate, joint venture, or you are having any other relationship, it could be clearly mentioned. but you cannot mention that this is the other related party. This terminology is not correct. So this is the observation which have been highlighted. Correct? Second case or next case study. From the information given in the annual report of some companies, the following discrepancies have been noticed or have been noted. It has been noted that certain companies are subsidiaries of other companies. However, the name of holding company was not disclosed in the related party disclosure. Second scenario, from the annual report of a company, it has been noted that wholly owned subsidiary has been formed during the year under review. However, the name of this subsidiary has not been disclosed as a related party under the related party disclosure. So under scenario number 1, you are the subsidiary company, and under scenario number 2, you are the holding company. And AS 18 clearly mentions that if control exists, means either you are having control over the another entity or you are being controlled by the another entity, means holding subsidiary relationship exists. Then it doesn't matter whether the transaction has taken place or not during the year. You are required to disclose the name of holding company in case you are subsidiary company, or the name of subsidiary company when you are the holding company. And you will not check whether any related party transaction has taken place or not during the year. This disclosure is mandatory when control exists. I am repeating myself. When control exists, name of holding party, holding company and subsidiary company must be disclosed. Next observation, non-disclosure of material transaction. Now again, this is very important observation. AS 18 says that if the amount of which is in excess of, means if you have entered into any related party transaction and the amount which is in excess of 10% of the total related party transactions of the same type, then separate disclosure is required. Now let me explain you with the help of one example. Suppose there is company H, which is holding company, and it is having 5 subsidiary companies, right? Subsidiary 1, 2, 3, 4, 5. It is having 5 subsidiary companies. During the year, this holding company has purchased goods from these 5 subsidiary companies, let's say for 1 crore rupees, right? And what is the bifurcation of such 1 crore rupees? From subsidiary 1, purchase of goods. The purchase of goods has been made for 50 lakh rupees. For subsidiary company 2, purchase of goods for 35 lakh has taken place. And for remaining subsidiaries, 5 lakh purchase of goods of rupees 5 lakh from each of the subsidiary company has been made, right? Now you are required to disclose the 2 table in the related party disclosure. Under table number 1, you will disclose this purchase of goods from subsidiary companies and amount would be 1 crore rupees. And you will prepare one more table in which you will disclose only those transactions which exceeds the 10% of the total related party transactions. Means under this scenario, the example which I gave you, you will disclose the transaction with subsidiary number 1 because it is 50% of the total related party transaction, and subsidiary number 2 which is 35% of the total subsidiary, or you can say total related party transaction in this case, right? So 2 tables are required to be prepared when the amount is exceeding 10% of the total related party transaction. And this is required for each transaction, for same type of transaction, right? So this is the observation. Company was not disclosing the material transaction in its notes to account. Correct? Next observation pertains to AS20, that is earning per share. Now, what is happening in this case? From the notes to accounts given in the annual report of a company, it was noted diluted earning per share has been stated to be as not applicable. Diluted earning per share has been disclosed as not applicable. Now, what could be the scenario? There might be chances that the company is not having any potential shares. If the company is not having any potential share, in this scenario, it might be possible that company has disclosed diluted earning per share as not applicable. What could be the second scenario? The effect of potential equity shares are anti-dilutive, and if the impact is anti-dilutive, then such disclosure is not required. But you cannot say diluted earning per share is not applicable. What could be the scenario? Your diluted earning per share could be equal to your basic earning per share, right? But disclosure is mandatory. You cannot say diluted earning per share is not applicable on your company. So again, this is the non-compliance which has been identified. Again, this is very important case study. Share application money received was disclosed in the balance sheet of a company, and earning per share, both basic earning per share and diluted earning per share, have been disclosed at the same value. Both EPS and diluted earning per share have been disclosed at the same value. Means while calculating the diluted earning per share, the company has ignored share application money, but you can't do so because share application money is in the nature of potential equity shares. Why? Because ultimately what you are going to do, you are going to issue shares against this share application money. And while calculating the diluted earning per share, this share application money should have been considered, but the same has not been considered by the company. So this is the observation with respect to provisions of AS 20. Next observation pertains to AS 21, that is the consolidated financial statement. Most of the accounting policies of the reporting company and that of its subsidiaries are similar and are in line with the generally accepted accounting principles in India. However, since certain subsidiaries are in business lines which are distinct from that of the reporting company and function in a different regulatory environment, certain policies in respect of investment, gratuity, depreciation, amortization, etc. differ. These policies differ. These policies are not in line with the accounting policies of the holding company, right? Now, what is happening here, or what is the provision of AS 20? Para 20 of AS 21. It says that consolidated financial statements should be prepared using uniform accounting policies for like transaction and other events in these similar circumstances. If it is not practicable to use uniform accounting policies in preparing the consolidated financial statements, the fact should be disclosed together with proportion of items in the consolidated financial statements to which different accounting policies have been applied. So what is happening here? Neither the proportion of these items have been disclosed in the consolidated financial statements, nor such fact has been disclosed that it is not practicable for the company to do so. Means it is not practicable for the company to identify the proportion. Neither the proportion nor such fact have been disclosed in the notes to account of the company. Next observation, and this is the last observation of the day. Intangible assets. From the accounting policy on deferred revenue expenditure given in the annual report of a company, it was noted that expenditure incurred on factory license fee, trademark fee, seed marketing expenses, public capital issue expenses, preliminary expenses, rental paid for pre-commencement of retail stores, factories, software development expenses has been treated as deferred revenue expenditure. All the above mentioned expenses have been treated as deferred revenue expenditure, which are being amortized over the life of the concerned items, right? If you will read the provisions of para 6.2 of AS 26, it says that an asset is a resource. An asset is a resource that is controlled by an enterprise as a result of past events and from which future economic benefits are expected to flow to the enterprises, right? Now, above expenses are not controlled by the enterprises, right? And if in case of factory license fee or software development fee, if these two items meets the above criteria, then these items should have been recognized as per the provisions of AS 26, which talks about intangible assets rather than deferred revenue expenditures. Means if software development expense and the factory license and trademark fee meets the above definition criteria, then you can recognize or the company can recognize these items as intangible assets and not as the deferred revenue expenditure. It is not allowed as per the provisions of AS 26. And this is done from my side. Now you guys are free to ask as many questions as you want.
So we have few questions with us. I'll start with the first question is restructuring charges as on loan taken by real estate companies for extinguishing high cost of debt for completing the project, whether the same charges is to be charged to project cost.
If you are taking it for refinancing, then it is not allowed. Doesn't matter whether you are real estate sector, automobile sector, or any other sector. Doesn't matter. The crux is that there should be loan, and this loan should be obtained for the purpose of acquisition, construction, or production of a qualifying asset. If it is not the case, if you are not meeting the criteria, then you cannot capitalize the borrowing cost to the cost of fixed asset.
Okay. The second question we have is on AS 20. The member has asked, can we leave blank for dilutive EPS
No, you
instead of
can't.
mentioning
You
BEPS?
can't. You can't.
Okay.
You can mention it is equal to, means the amount should be mentioned, which can be equal to the basic EPS, but you cannot write it is not applicable or blank. This is not allowed as per the provisions of AS 20.
Okay. That's it, sir. We had these questions only. And thank
Okay.
you so much for such an enlightening session. I'm very sure our members are helped with this because there are a lot of things we come across day to day, but we are not clear with how to do it. So thank you so much for your session.
And thanks for your time and patience.
Thank you so much. It was our pleasure.
Okay.
Thank you. So moving ahead, we have with us our next speaker for today, CA Sulabh Padsha. He has more than 10 years of experience in direct tax litigation and advisory. He has been chairman of direct tax committee and member of various committee as well of Ahmedabad branch of WRC of ICAI. He has also delivered multiple sessions at various forums such as CA Study Circle, Income Tax Bar Associations, etc. We welcome you, sir, and let the members be enlightened through you.
Thank you, Deepika. I am very thankful to, first of all, CA Purushottam Khandelwal sir, CP committee chairman, for giving me this opportunity. I am also thankful to ICI, and I would like to say that this topic that has been taken today regarding 43BH, that is a burning issue since its introduction, and it still goes on because it's a first time. This is the first tax audit season wherein that will be disclosure regarding 43BH. So I have tried my best to cornering each and every questions and doubts in this PPT. So now I'm starting with the session. I just give me a moment. I'm sharing the screen, the PPT. So these are the today's agenda of our session regarding 43B close edge. First, we'll look insertion of close edge of section 43B. Then we'll see the terms and phrases which has been provided in MSMED Act regarding close edge of 43B. Then again, treatment of interest paid on delayed payments. Then practical scenarios. Again, its effect in tax reporting in tax audit report and ITR filing. Some FAQs I have also framed and covered on this topic. I have prepared one filter that we'll see at the last, and we'll take some key takeaways at the end of the session. So I would like to start with, first of all, insertion of close edge to section 43B. Friends, I am first of all reading word to word direct line of the close edge, section 43B. Any sum payable by the SSE to a micro or small enterprise beyond the time limit specified in section 15 of MSMED Act shall be allowed only in computing the income referred to section 28 of the previous year in which such sum is sorry, this one. Sorry. Only in computing the income referred to section 28 of the previous year in which such sum paid by him. There is a first proviso in section 43B also that provides nothing contained in this section except provision of close edge shall apply in relation to any sum which is actually paid by the SSE on or before the due date applicable in this case for furnishing the return of income in respect of previous year in which liability to pay such sum was incurred as aforesaid. Evidence of such payment is furnished by the SSE along with return. Friends, this is the direct line from the Income Tax Act. Now, I would like to focus on some specific words that starting from the language that any sum payable to micro or small enterprise. So these are the important words that micro and small enterprise that we need to understand, that has been provided not under Income Tax Act but provided under MSMED Act under various sections. Just like income tax, there is a section 2. Similarly, in MSMED Act, there is a section 2, that is the definition section. Then then another important point is word payable and paid. So if you will look at the section 43B, in all the clauses, that is clause A, B, C, D, E, F, G, H, in except H clause, all the clauses there is a provision that if you are there is a sum payable and you have paid the same before due date of filing of return, that is section 139(1), then it is allowable as deduction in the year in which it belongs to, that is the previous year in which it belongs to. Clause H is an exception to all these clauses under section 43B. Clause H, under that clause H, any sum payable which is allowed as deduction if you will comply with the conditions provided in MSMED Act. So now for understanding for allowability of deduction of under clause H of section 43B, we need to understand various definitions provided in MSMED Act. Under Income Tax Act, they have just mentioned that this simple line, if you will look at the language of the sections, that everything has been referred to the MSMED Act. So now I'm referring the clauses that various terms and phrases provided under MSMED Act. First of all, we will look at the definition of enterprise, which is provided under section 2 small e of MSMED Act, section MSMED Act. Enterprise means an industrial undertaking or a business concern or any other establishment by whatever name called engage in the manufacture to the production of goods in any manner pertaining to any industry in the first schedule to the Industries Act 1951, or engage in providing or rendering of any services. Friends, look at the language of the section. What is an enterprise? earlier we have seen that under section 43BH there is a word enterprise. So to understand the word enterprise, let us go in depth that enterprise means engage in manufacture to the production of goods in any manner. So first of all, which enterprise will cover that manufacturing industry? Second, or engage in providing or rendering of any services. That means service industries. Friends, here under the definition of enterprise, trading concerns has been specifically excluded. What does that mean? Section 43B clause H will not apply to the trading concern. So it will apply only to the manufacturing concern and service industries. Next, classification of micro, small and medium enterprise as per section 7 of MSMED. Why this needs to be understood? Because the clause 43BH will only apply to micro and small enterprise and not to the medium enterprise. So if we will look at the definition that is provided under section 7 of the MSMED, that what is micro enterprise? The enterprise wherein investment in plant and machinery is less than rupees 1 crore and turnover less than rupees 5 crore, that is defined as micro enterprise under MSMED Act. Similarly, small enterprise is defined as investment in plant and machinery less than 10 crores and turnover less than 50 crores. And last, medium enterprise is defined as investment in plant and machinery less than rupees 50 crores and turnover less than rupees 250 crores. So the enterprise which fulfills the criteria of micro and small enterprise, that will only cover for the applicability of clause H of section 43B. So if you are making payment to the any person or any enterprise or industry which is a medium enterprise, so that is specifically excluded and that will not cover under 43BH. There is also interesting fact that how to define the investment in plant and machinery, that is also provided various inclusion as well as exclusion, that some of the expenditures to be included and to be excluded while calculating the investment in plant and machinery. But that is not that much relevant from the point of view of the payer, because payer has to see that whether it's a micro enterprise or small enterprise. While granting the registration by MSMED authority to the enterprise, they are considering all these criteria, that what to be included and what to be excluded in plant and machinery. Say for example, I have mentioned in the bottom of the screen. Kindly note that cost of pollution control, research and development, industrial safety device shall be excluded for the purpose of calculating investment. This is the sample. There are also various other items which has been excluded and some of the items which has to be included also, that is separately mentioned under MSMED Act and also clarified by the circular as well. If time will permit, we will take that circular later on. Moving to the next slide. Friends, this is the most important. I would say that section 15 is the crux of the whole 43BH, because under clause H of 43B, the Income Tax Act is talking about the timeline provided under MSMED Act, and the same has been defined under section 15. So section 15, liability of buyer to make payment, that has been provided under chapter 5 of MSMED Act, where I'm reading word to word first of all, and then we'll understand the definition in depth. Where any supplier supplies any goods or renders any service to any buyer, the buyer shall make the payment on or before the date agreed upon between him and supplier in writing, or there is no agreement in this behalf before the appointed day. So first, the important point is this: buyer shall make the payment on or before the date agreed upon between him and supplier in writing. What does that mean? The buyer who is going to make the payment towards purchase of goods, and if there is some agreement between buyer and supplier in writing, then they will fall, this transaction will fall under this line. The next, where there is no agreement in this behalf before the appointed day. So second position is no agreement. First one, there is a written agreement. Second is no agreement. Before the appointed day, this is also an important terms. Appointed day, that will understand the definition of appointed day in the next slide. Next, provided that in no case period agreed upon between the supplier and buyer in writing shall exceed 45 days from the day of acceptance or day of deemed acceptance. So again, there are 2-3 important terms such as day of acceptance, day of deemed acceptance. See, in now whole section 50, there are important terms which can be called as the agreement in writing, the meaning of appointed day, the meaning of day of acceptance, and meaning of day of deemed acceptance. To sum up the section 15, we need to understand all these definitions first of all. So in next slide, we'll understand the definitions. Friends, please understand. Appointed day means, why appointed day is the crux of the section. Why I'm just again referring the earlier slide, that where there is no agreement, we have before the appointed day. So here timeline provides under the word appointed day. Therefore, the appointed day meaning is very important. Appointed day means the day following immediately after the expiry of the period of 15 days from the day of acceptance or day of deemed acceptance of any goods or any services by a buyer from a supplier. What is appointed day? Appointed day means following immediately after expiry of the period of 15 days. Friends, maybe some may be confused because in earlier side there was a period of 45 days, but the wordings were that shall not exceed 45 days. So basically under section 2 small b of MSMED Act, the time limit of 15 days is provided. There are two timelines under this MSMED Act relevant to section 43B close Act. The minimum period is 15 days, maximum period is 45 days. Just to sum up this, both the sections. So appointed day means what? The following immediately after the expiry of the period of 15 days from the day of acceptance or day of deemed acceptance. Now, what is day of acceptance? Day of acceptance means the day of actual delivery of goods or rendering of services. This is the one scenario. Next scenario, where any objection is made in writing by the buyer regarding acceptance of goods or services within 15 days from the day of delivery of goods or rendering of services, the day on which such objection is removed by the supplier. So, what is the day of acceptance? There are two scenarios. Day of acceptance means actual delivery of the goods or rendering of services in case there is no objection. If objection is there, then you have to refer to this clause B, where objection is made in writing by the buyer regarding acceptance of goods or services within 15 days from the date of delivery of goods or rendering of services. Such objection is removed by the supplier. What will happen in this case? If goods has been delivered on particular day and if buyer has not raised any objection regarding quality or any other defects in the goods, that means buyer has accepted the goods. So that will be the day of acceptance. If in a case where there is a some defect has been observed by the buyer and he has raised objection in writing to the supplier, then in that case the supplier has to resolve the such such objection has been raised in writing again, and the day on which the objection will get resolved, that will be treated as day of acceptance. So in day of acceptance, there are two scenarios. Now, day of deemed acceptance. Day of deemed acceptance means where no objection is made in writing by the buyer regarding acceptance of goods or services within 15 days from the day of delivery of goods or rendering of services, the day of actual delivery of goods or rendering of services. So, what does that mean? In case when there is no objection raised by the buyer regarding acceptance of goods. So in that case, the scenario will be the day will be treated as deemed day of deemed acceptance within 15 days from the day of delivery of goods or rendering of services. See, in this there are three important terms: appointed day, day of acceptance, day of deemed acceptance. Appointed day that covers definition of day of acceptance and day of deemed acceptance. So if you will thorough with these two definitions, day of acceptance and deemed acceptance, then this full section will get clarified. We'll take the practical scenarios on this definition in subsequent slides. If payment is not made within time limit specified under section 15, then compounding interest payable, which shall be 3 times of benefit. Friends, under there are two kinds of payment which has to be made by the buyer to the micro or small enterprise under MSMED Act. One is the payment towards purchase of goods, and another is the interest on delayed payments. So the allowability of interest on delayed payments to MSMED is also dealt with the section 23 of MSMED Act. Section 23 of MSMED Act provides, notwithstanding anything contained in the Income Tax Act 1961, the amount of interest payable or paid to by any buyer under or in accordance with the provision of this act shall not, for the purpose of computation of income under income tax, be allowed as deduction. So what section 23 of MSMD Act provides? Friends, this section overrides whole income tax act and says, notwithstanding anything contained in the income tax act, the amount of interest payable or paid by any buyer shall not, for the purpose of computation of income, be allowed as deduction. Surprisingly, in many cases, we have seen number of times that one act should not override another act, but surprisingly here this happens. This is as per my understanding that within section, one section can override another section, but this is what right now mentioned under this act, that MSMED Act section 23 overrides whole sections of the Income Tax Act regarding allowability of interest. So basically, two kinds of disclosure will be there regarding payments towards MSMED. One is payment has to be made towards purchase of goods, and another is towards interest on delayed payments. Friends, these are some practical scenarios. If scenario 1 I am reading, if day of acceptance or day of deemed acceptance and date of payment fall in the same financial year, then even if it is delayed payments, expense shall be allowed as deduction under this clause. So what is the scenario? If day of acceptance and deemed day of acceptance and date of payment fall in the same financial year. So let us to get with the example. Say for example, in the financial year 23-24, day of acceptance is 1st January 2024 and date of payment is 1st March 2024. So basically what happens, date of payment is after 60 days, but it is within same financial year. So even if it is delayed payments, how it is delayed payments? Under MSMED Act, there are time limit for payment is maximum 45 days. And here payment has been made beyond 45 days. That is beyond on after 60 days. That is 1st January is the day of acceptance and date of payment is 1st March. So even if the payment has been made beyond the time limit prescribed under MSMED Act, that is beyond 45 days, even though it will be allowed as deduction because it is falling in the same financial year. Second scenario, day of acceptance or deemed acceptance and date of payment fall in the different financial year. But if it satisfies the conditions laid down under section 15 of MSMED Act, that is 15 days or 45 days, expense shall be allowed as deduction under this clause. Friends, what happens in this scenario? Say for example, date of acceptance is 21st March and date of payment is 1st April. So on 31st March, financial year will get end and on 1st April, the date of payment, new financial year will start. So both the financial year will be different. Day of acceptance is falling under financial year 23-24. Date of payment is falling under financial year 24-25. But it satisfies the conditions provided under section 15, that is time limit within 15 days or 45 days. So that's why it is allowable as deduction for the financial year 23-24 because payment has been made within 15 days. In same situation, if payment is made beyond 15 days, but if there is an agreement in writing, then in that case, that time limit will be of 45 days for the payment. So if you will again looking back to the language of the section, that if there is an agreement in writing, the time limit for the payment is 45 days. When there is no agreement, time limit is 15 days. So when there is a agreement in writing means, friends, what? If that is what I assume, because every time it is not possible for everyone to get the agreement in writing for each and every purchase or time to time in every year. So if you have gone through the invoices between raised by the most of the buyer or suppliers towards each other, there is a always conditions mentioned below the invoices that payment should be made within 15 days or 30 days or 35 days. That should be also treated as agreement according to me. So when such kind of agreement is there, once seller has issued the invoices to the buyer and there is a time limit mentioned in the invoice that payment should be made within 30 days, then that buyer can make the payment within 30 days and that will be allowable as deduction if the payment is made within 30 days. Scenario 3, if amount is outstanding or payable to micro or small enterprise in the beginning of financial year 23-24, that is as on 1st April 23, and it is settled during the year, expenses shall not be allowed as deduction under this clause. Why? Because when the amount is outstanding on 1st April 23, the section 43B clause H has been introduced from 1st April 23 onwards. So before that, if any transaction has been made and the payment is outstanding towards the transaction and that is made after 1st April 23, then it is not covered under clause H of 43B and one should not apply as 43BH on such kind of payment. The major reason is one has already claimed that expenditure, because if on the 1st April 23 there is a payment towards some debtors that is outstanding and if you are making the payment, so basically that debtors pertains to the earlier year in which you have booked the expenditure already. You have already booked expenditure, you have already claimed, and the balances is just carry forward in the balance sheet as a debtors, and towards that you are making the payment. So basically, that is not routed through the profit and loss account for the financial year 23-24, and therefore there is no question of allowability or disallowance under this clause. Scenario 4, if payment is made in piecemeal, where first part is paid as per section 15 of MSMED Act, but second part is paid in next financial year, then expenses to the extent which have been paid as per section 15 shall be allowed as deduction. What is the scenario? If payment is made in piecemeal, where first part is paid as per section 15, that means suppose there is a total invoice of rupees 2 lakh rupees, 1 lakh rupees has been paid within 15 days or 45 days as per conditions mentioned in the section 15, and the another 1 lakh rupees payment which is outstanding, that has been paid in the next financial year. Say for example, there is a invoice of 1st March 24, that is 2 lakh rupees. Out of that, 1 lakh rupees has been paid within 15 days or 45 days as per the criteria laid down under section 15. So that 1 lakh is allowable during financial year 23-24. Now 1 lakh is outstanding which has been carried forward, and that has been paid after 15 days or 45 days as per section 15 of MSMED Act. So that will be allowable in the year in which it has been paid. So that will be allowable in the next financial year, that financial year 24-25. So this can be also the situation. So every time that doesn't happen, that if there is one invoice and that has to be paid fully for getting the benefit of deduction. No, it is not like that. You can get the benefit for the part payment also, that if you make the part payment within criteria laid down under section 15, then such part payment is also allowable as deduction under clause H of section 43B. If day of scenario 5, if day of acceptance or dim day of acceptance and check issue date are within the provision of section 50 of MSME Act, however, check clearance date is beyond appointed day, expenses shall not be allowed as deduction under this clause. Day of acceptance or deemed acceptance and check issue date are within the provision of section 15. What does that mean? Again, there is a day of acceptance, say for example, is a 21st March, and the party has given, buyer has issued the check dated 25th March to the seller. The check has been cleared. Say, let us assume the time limit for this payment is 15 days. Let us assume check has been cleared on 10th April. See, appointed day is 21st March. Check issue date is 25th March. So basically, check has been issued within 15 days, but it was cleared on 10th April, that is beyond 15 days. Then such payment will not be allowed as deduction in that financial year, that is in financial year 23-24, and it will be allowed as deduction in the next financial year, that is in the 24-25, because the check has been cleared after the time limit prescribed under section 15 of the MSMED Act. So this can happen many times, and maybe people may make such kind of planning for getting such kind of deductions under 43BH, that check has already been issued, and on that basis we can claim that seller has not deposited or not, like that. But the wordings are very clear that payment has to be made as per the time limit prescribed under section 50. And if you look at the language of the section, the intention or object of the legislature is also that micro or small enterprises will get the payment at the earliest to to move or to get the liquidity faster and to get more business and for the business growth and development. That is the basic object behind introduction of this section. Scenario 6, where agreement for payment exist. So in this case, what will be the time period for making the payment? 45 days, because there is an agreement for payment exists. Here, date of service is 10th June. That means service render we 10 June को 10 January, sorry. Then date of objection is raised on 20th January. So that objection has been raised within 15 days. What that section says, section 2 small b, that we have seen the definition that if buyer is raising the objection within 15 days from the date of delivery of the goods, then such objection period till the date of objection will get resolved will be excluded. So here date of service rendered is 10th Jan, objection is raised within 15 days, that is 20th Jan, objection resolved, and date of acceptance is 25th Jan. So the day on which objection is resolved, that will be treated as date of acceptance, so that is 25th Jan. So in this case, date of acceptance is 25th Jan. Date of invoice is 30th Jan. Friends, please remember, for the purpose of applicability of clause H of section 43B, date of invoice is totally irrelevant, because the wordings are there that what will be the date of acceptance, the date of actual delivery of the goods or services. Now you must have that question that what is the actual delivery of the goods, because there is no clear definition under either Income Tax Act or MSME Act to understand what is the actual delivery of the goods. So we have to understand with the logic that if buyer has ordered the goods and the goods has been received as an actual delivery, buyer has received the goods, then that can be treated as considered as actual delivery. And if buyer has not raised any objection on the day of actual delivery, then it will be treated as date of acceptance. If buyer has raised some objection towards that goods, then the day on which objection will get resolved will be treated as date of acceptance. So date of invoice 30th Jan is immaterial. Payment terms mentioned in invoice is 60 days from the date of invoice. So again, 60 days is not the time period which has been provided under MSME Act. Maximum period under MSME Act is 45 days. As per section 15 of MSME Act, if agreement exists in writing, then time limit for payment is earlier of as per agreement or 45 days from the date of acceptance or deemed acceptance. So finally, what is the due date of payment to get the deduction under section 43BH? In this case, that is 10th March. How? The objection is resolved and date of acceptance is treated as 25th Jan. Now, the invoice period is provided as 60 days, but we have to consider 45 days or 60 days, whichever is earlier, as per section 15 of MSME Act. So from the 25th Jan, we have to consider 45 days. So that will comes to 10th March. So in here in this scenario where there is an agreement of payment exists, so considering all these situations, the due date will be the 10th March. In this case, if agreement doesn't exist, then what will be the due date for the payment? That will be from the 15 days from the 25th Jan, that is date of acceptance, and it would be 9th February from that is 15 days from 25th January. Friends, now we are taking some FAQs on this. Question 1. Whether provision of clause H of section 43B is applicable to unregistered micro or small enterprise, even if it meets criteria of investment in plant and machinery and turnover. Friends, just to sum up this whole Section 43B close edge with various definitions provided under MSMED Act, that is appointed day, day of acceptance, day of deemed acceptance, definition of micro and small enterprise. To get the deduction under 43BH, just apply these basic filters every time. So in context with these questions, let's read once again. Close edge of 43B is applicable to unregistered micro or small enterprise. See, there are 3 to 4 filters we always need to apply. To whom the section will apply? That will apply to the manufacturer or service provider, not at all to the traders. Second, it will apply only to the registered micro enterprise or small enterprise. So here the word is unregistered micro or small enterprise. So section 43BH will not apply at all to the unregistered micro or small enterprise. Now, what is the registered micro or small enterprise? Friends, if you will see the section 8 of the MSMED Act, there is a definition provided about how the one enterprise can get registered under MSMED Act as a micro or small enterprise. They need to apply with certain documents, and then authority will verify the documents and provide the recognition as a micro or small enterprise if they will fulfill that criteria of section 7, that they have minimum they have that investment within time limit and turnover within time limit as per section 7 of the act of MSME Act. So in that case, so in this case, when the unregistered micro or small enterprise involved and buyer has to make the payment to the unregistered micro or small enterprise, then 43BH will not apply. For this, you just go through the definition. This is the Barrack definition, that where any supplier supplies any goods or render any services before date agreed upon or supplier in writing. So here again, just a moment. This slide. Yes. So supplier means who? A micro or small enterprise which has filed a memorandum with the authority of section 8 and includes national this is some definitions extended, but we just need to look at this definition of supplier. Supplier means micro or small enterprise which has filed memorandum with the authority referred to in subsection 1 of section 8. So what I said earlier, that one has to apply for the registration under micro or small enterprise, they have to file the memorandum with the authority. And if they will get the registration, the authority will issue the certificate wherein it will be mentioned that this enterprise is registered as micro enterprise or this enterprise is registered as small enterprise. So on that basis, you can decide that enterprise is a registered enterprise or not. And after applying that filter, you can always decide applicability of 43BH. So in nutshell, to unregistered micro and small enterprise, 43BH will not apply. Question 2. If supplier is engaged in both trading as well as manufacturing services, in that situation, whether section 43BH is applicable for dues outstanding to that supplier? Answer is, in such a situation, 43BH can be made applicable for dues outstanding to such suppliers to the extent supplies has been received as a result of manufacturing activity or service availed. And it practically happens that one supplier is involved in two kinds of activity. One is trading activity and another is manufacturing activity. For both the activities, that supplier is maintaining even separate books of accounts. So if you have made the transaction of trading and if you have made the transaction regarding manufacturing of goods, so you have to apply the 43BH only to the extent of payment to be made for the purchase of manufacturing of the goods, that manufactured goods, and not from the traded goods. So in that case, you need to ask to the supplier about its category of registration, that he is registered as a manufacturer or trader. If in the certificate it is reflected as trading of goods or traders, then you can take the call that he is a trader and he is involved in trading of goods. So that time you may, if you may not report this transaction, then that can be skipped as well, because registration certificate is very important. And I always believe that if you are asking to the supplier to for the identification that whether he is a registered or not, whether he is a micro or small enterprise, whether he is a manufacturing industry, trading industry, and he is not providing you the correct details, then what you will do? That you need to apply 43BH on the basis of details and documents provided by the supplier only. We cannot go at the place of the supplier every time, and we are not able to see every time that whether he is a manufacturer or whether he is a trader, what the certificate, why certificate has been issued in the category of trader by MSME, even if he is involved in the manufacturing of goods and all. You need to get the certificate from the supplier. If he is showing as a trader or manufacturer, you have to identify from that, and accordingly you will apply to 43BH. So here in this case, the 43BH will be applicable to the dues outstanding to the such supplier to the extent of received as a result of manufacturing activity or service allied. So there is only one supplier who is involved in both the activities. If there is a outstanding payments towards the supplier is rupees 5 lakh, out of that if 3 lakh rupees towards manufacturing to the purchase of manufactured goods, then you need to apply 43BH to that extent only, and you need not to apply to that outstanding of rupees 2 lakh, that is towards trading of goods. Question 3. Can disallowance be attracted under Section 43BH for dues outstanding in relation to capital expenditure? No, because 43B read as notwithstanding anything contained in any other provision, a deduction allowable under this act in respect of. The words are very clear that it is applicable only to those deductions which is otherwise available under Income Tax Act. Capital expenditure is not as a allowable expense under Income Tax Act. Hence, no disallowance will be attracted under 43BH for the dues outstanding towards capital expenditure, because it is not basically routed to the profit and loss account, and there will not have any impact on the profit or loss, because you are not going to claim anyway as an expenditure in profit and loss account, and that's why 43BH towards capital expenditure not applicable. How year-end provisions will be dealt in for disallowance under 43BH? As per Section 15 and Section 2B of MSME Act, payment must be made within 15 or 45 days from the date of actual delivery of the goods or services. Hence, for any provision made for which actual delivery of goods or service doesn't take place till the end of the year, no disallowance can be made. Friends, year-end provisions will not attract this disallowance because there is no actual delivery of goods or services taken for that. It is just a provision. So there is no disallowance under 43BH. One practical scenario I have recently discussed with one of the professionals, that similarly in our field as a chartered accountant, when you are rendering services of audit, in the year end, your client is making the provision of audit fees on 31st March. He is also deducting TDS as well and booking as an expenditure. The important question is day of actual delivery of goods, because what happens? He has booked the expenditure on 31st March, and your service will be rendered. How it will be treated as rendering or completion of services on the day of audit report will be signed. So that will be signed maybe I don't think so. Anyone can sign the audit report within 15 days. That is by 15th April. In most of the cases, we all know that most of the audit report will be signed in the month of June or even in May, June or July or thereafter. So basically, that criteria of 15 days or 45 days, that will be difficult to manage the pay, to get the service rendered in that period. So that will be very interesting to see that how this clause will apply in such kind of cases. Because once the expenditure is booked on 31st March and the payment will be made after that, so that will be the next financial year. Even services will be rendered thereafter. So that time, to deal with the 43BH, you need to consider all these issues. What if buyer makes payment to the supplier after 15 or 45 days, but before filing of return of income for that financial year? As per amendment made in the first proviso to section 43B, benefit of first proviso will not be available for due to micro and small enterprise. Hence, payment is made before filing of return of income. Deduction can only be claimed in the year in which actual payment is made and not in the year of approval. So, friends, the as per amendment in the first proviso, benefit of first proviso will not be available for the payments to the micro and small enterprise. So, if the payment is made before filing of return of income, deduction can be claimed only in the year in which the actual payment is made and not in the year of accrual. Whether disallowance under 43BH be attracted for the assessee opting presumptive taxation? Again, answer is 43BH is not applicable to the assessee opting presumptive taxation. Hence, no disallowance can be made in such case. Why? Because in presumptive taxation, there is no question of claiming any expenditures or deduction. So, one need not to look at the applicability of 43BH in such scenario. Friends, this is very burning question since the introduction of the section, that whether it is applied to the registered traders who are micro or small enterprise covered in 43BH. Friends, we have already seen the definition at the beginning of the session that what is termed as enterprise under section 2 of the MSMED Act, that any establishment engaged in manufacturing or production of goods or rendering of services. So the definition of enterprise itself excluding traders. So traders will not cover at all for the applicability of 43BH, meaning thereby if one has to make the payment to the persons who is engaged in the trading of goods, whether it is a micro enterprise, small enterprise, registered enterprise, unregistered enterprise, medium enterprise, whatever it is, section 43BH will not be applicable to the traders. For that, the MSMED has issued separate memorandum that I have reproduced the extract of that memorandum that is officially available on the MSMED website as well. The memorandum is dated 1st September 21, wherein also I am reading that White OM dated to 2nd July 21 issued by this office. Retail and wholesale trade have been included as MSME, allowing them to register on Udyam registration portal and benefit to retail and wholesale trade MSME to be restricted to priority sector lending only. In this context, some MSME have been approached by the traders to get the benefit of provision of delayed payments as per MSME Act 2006 available to MSE. It is clarified that as mentioned in the aforesaid OM, that is Office Memorandum, the benefit to retail and wholesale trade MSME are restricted up to priority sector lending only, and any other benefits, including provision of delayed payments, are excluded. Friends, this office memorandum issued by MSME Act itself says that the benefits to retail and wholesale trade MSME are restricted to priority sector lending only, and any other benefit, including provision of delayed payment as per MSMED Act, are excluded. So, traders are specifically excluded by the definition of enterprise as well as by issuance of this memorandum by MSMED Act. So now there is no confusion or dispute about whether 43PH will apply to the trading industry or trader or not. Friends, we'll see the reporting in tax audit report and treatment in the tax return about disallowance of payment under 43BH and towards and also the interest admissible under section 23 of MSMED Act. So if you will look at the clause 22 of the tax audit report, the clause is appearing as the clause 22 before amendment is appearing as amount of interest admissible under section 23 of Micro Small Enterprise Act 2006. Friends, interest on delayed payments to micro and small enterprise is already included in the tax audit report disclosure since long. But now, after introduction of clause H, the wordings, some of the wordings are added after this figures 2006 that wide notification dated 19th March 24 issued by the CBDT, following words have been inserted and clause 22 is amended accordingly. So now in tax audit report, the clause 22 will be read as amount of interest admissible under section 23 of Micro, Small and Medium Enterprise Development Act 2006 or any other amount not allowable under clause H of 43B of Income Tax Act 1961. So in tax audit report under clause 22, you have to disclose two items. One is interest admissible, one interest is inadmissible under section 23 of MSMED Act and another is disallowance as per clause H of section 43B. These both the items will be reported under clause 22 of the tax audit report as per as per the notification 3424 dated 19th March 24. And these are disclosures in the income tax return regarding 43B. So in schedule OI, that is other information at serial number 10, you have to disclose any amount disallowed under 43B in any preceding year but allowable during the year. So basically allow 43B disclosure of 43BH will also fall under this line item, that serial number 10 of OI. That another is serial number 11, any amount debited to profit and loss account but disallowable under 43B. The first is talking about if you have made some disallowance, that under serial number 10, if you have made some disallowance in earlier year or preceding previous year, but make the payment during the year and that's why it is allowable. So that will be reported under this serial number 10. And at serial number 11, if you have debited some expense, if you have debited the payments to the profit and loss account, but it is disallowable under 43B, then it has to be reported under serial number 11 of schedule OI. Similarly, under schedule BP, that is computation of income from business and profession, one has to report at serial number 18 under ITR form that any amount debited to profit and loss account of previous year but disallowable under 43B, and at serial number 31, any amount disallowed under 43B in any preceding previous year but allowable during the previous year. Friends, now these are some filters for the application of 43BH of the Income Tax Act. I have number of times I have received many questions after the sessions that how the 43BH will apply Again, the discussion of that definitions, that complicated definitions provided about appointed day, deemed day of acceptance, that small enterprise, medium enterprise. The question is regarding to apply to the traders or not. So to sum up all these things, there are these three filters which one has to always apply to check the applicability of 43BH. One is to check whether person to whom you are making payment is a manufacturer or service provider. See, this is the first basic checkpoints. Keep in mind always that the person to whom you are making the payment is important. The person who is making the payment is not at all important for 43BH. That means buyer is not important. The buyer is making payment to the supplier. That supplier is important. So you need to always check the category of the supplier, whether he is a manufacturer or trader or service provider. If he is a manufacturer or service provider, then 43BH will apply subject to the certain other conditions. But if he is a trader, then it will not apply. 43BH is applicable irrespective of payer is a manufacturer or trader or service provider, as category of payer is not at all relevant or important. The person who is making the payment, if he is a trader, manufacturer, service provider, whether he is an individual, partnership firm, company, nothing you have to see. You just need to check the person you are making the payment, whether he is a manufacturer or service provider. Yes, then go ahead at second filter to check whether person to whom you are making the payment is a registered manufacturer or service provider. If yes, so here the word added is registered. Just a moment. The second filter is to check whether person to whom you are making the payment is a registered manufacturer or service provider. If he is a registered, then only it will be applied. If not registered, again it will not be applied. So first is if he is a manufacturer or service provider, go ahead. Second is if he is a registered, then go ahead. So even if he is a manufacturer or service provider but not registered, then stop. 43BH will not apply. Now go to the next checkpoint to check further whether person to whom you are making the payment is a registered manufacturer or service provider as a micro or small enterprise under MSME Act. If yes, then only it will be applied. If not, micro or small enterprise under MSME Act, then it will not be applied. So what is the third checkpoint? Whether the person to whom you are making the payment is a micro or small enterprise, then only it will be applied. Otherwise, it will not be applicable if it is a medium enterprise as per the provisions of the MSMED Act. So, friends, these are three filters you need to apply for the applicability of 43BH. And to sum up the whole section, if you will go through these three filters, you can easily find the applicability of the section. So I'm just repeating the 1, 2, 3, that three words: manufacturer or service provider, second registered, and third micro or small enterprise. If these three conditions will be fulfilled, then only section 43BH will be applicable. Otherwise, it will not be applicable. Friends, these are some key takeaways of the sessions. The provision of this section applies to all the persons, whether it is a proprietorship, individual, partnership, firm, company, LLP, who purchase the goods or services from the registered micro or small enterprise. So, if buyer, whether buyer is a proprietorship, individual partnership firm, company, LLP, whatsoever, purchase the goods or services from the registered micro or small enterprise engaged in manufacturing of the goods or services, then this provision will apply. Here in this case, you don't need to see the turnover or audit criteria for the buyer. The buyer who is making the payment, if it doesn't cover under audit, or if it doesn't have any specific threshold of turnover, irrespective of that, this section will apply. If second, if expenses incurred during the financial year and paid in the same financial year, irrespective of the time limit, it is allowed. This means what? If on 1st April 24, you have purchased the goods, you have received the delivery of goods on that day only, that is 1st April 24. And if you have to make the payment within 15 days or 45 days. But if you are not able to make the payment, and you will make the payment before the end of the year, that is before 31st March, so that is within financial year, then you will get the deduction in that year, even though you have not make the payment within time limit provided under section 15, because it is made in the same financial year. If third one, if expenses incurred during financial year and paid in next financial year within time limit provided as per section 15, it is allowed. Fourth key takeaways, if expenses incurred during financial year paid in next financial year beyond time limit as per section 15, it is disallowed and allowed in the financial year in which payment is made. Fifth, interest on delayed payment is disallowed as per section 43B, section 23, reduced section 16 of the MSME Act. With this, I'm ending up the session and handing over to CA Deepika. If take any questions from the audience.
Thank you so much, sir. The session was indeed a very interesting and lightning with the current scenario, as this is one of the most burning topic as of now. So, as you rightly said, let us take some questions of our audience.
Please.
So, starting with the first question, it is for clause 2N3. Supplier, does this mean that registration under MSME is not mandatory for applicability of section 43BH in cases where company is engaged in selling goods produced by micro or small enterprises and rendering services which are provided by such enterprises?
So, registration is mandatory as per my opinion, because the wordings is the enterprise which is covered under the definition for the applicability of 43BH, that registration is mandatory in such cases. And you need to check that registration with the certificate or with MSME number on the website as well. There is a provision or option on the website on MSME itself that you can check the eligibility by entering the MSME number if supplier has provided to you.
Okay, okay. The next question we have is, if amount is payable as on 1st April 2023 and not paid during entire financial year 2024, so what would be the scenario in this case for disallowance of amount?
The year in which, that is on 1st April 23, if amount is due. So basically, the amount is due means what I assume that is the year in which the amount gets due. It is not carry forward as per the question. So in that scenario, it will be disallowed in that financial year. And if it carry forward till 1 or 2 or 3 years, then in the year in which the payment will be made, that will be allowable in the year of payment only. So on 1st April 23, the amount is due, and if it will be paid in the next financial year, that is after 31st March 24, then it will be allowed in the financial year 24-25 and not in the financial year 23-24.
Okay, okay. But sir, this question also brings us to one point that the section itself is applicable from 1st April 23. So
Yes.
any amount which has been incurred before April 23 but not paid. So whether that would also be covered for the disallowance under the section?
No, that will not be covered. That I have already taken in my FAQ as well. That is one scenario which I have posted in my PPT as well. That if you have incurred some amount in financial year 22-23, section is applicable from the 1st April 23. So you have already booked that expenditure in your books in financial year 22-23. So now there is no question of any claiming of any expenditure or deduction in financial year 23-24. So section will not be applicable in that case.
Okay. Okay. And in case like continuing to this part, there was an opening balance on 1st April 23, which was not paid. However, there was some purchase transaction, like the transaction during the year, and the payments were made for the bills during the year, and the opening was as it is. So either the payments would be taken as FIFO basis or bill to bill basis, like the opening would not be affected.
Yes, there is no clarity about this question in the section or any provisions of the MSMED Act. But as per my understanding, you can always match bill to bill payment and you can claim the deduction on that payment basis. Again, and you can always get the amount showing as carry forward from the earlier year balance. But for that, you must get ready with the explanation that why you have not make the payment of outstanding dues and why you are making the payment towards the current dues. If there is some dispute or there is some discrepancies in earlier years towards that payment, that you need to justify at the time of scrutiny assessment. Otherwise, you can claim the deduction on that payment basis. There is no such clarification or any mandate that you need to follow FIFO basis. That is not such mandate.
Okay. So the next question we have is, as you said that this section would not be applicable for the capital goods. But one of our member wants to know that what if we are claiming depreciation, which is charged to profit and loss account? So will this section be attracted to that in case the payments are not made?
No, it will not be attracted even in that case because depreciation is not something which is dealt with by MSMED Act Section 50. MSMED Act says only about payment of purchase of goods or services, and for the capital expenditure, you are not claiming that expenditure, but you are claiming depreciation arises from that expenditure. So that is something different from the expenditure itself. So when capital expenditure is that, the section is not applicable, and you can always claim the depreciation without any other restrictions.
Okay. The next question is whether we have to check the registration status at the time of supply or at the year end, like while reporting or at the time of supply.
If you will see that from the 1st April up to January, or I would say 15th February, people are not going to check even if whatever sessions or whatever seminars will be taken and whatever discussions will be there. But once 15th February will be there, so that 45 days period will get start. So that time people will start checking every time. So basically, if you will check the status at the time of supply, then it will be helpful to you to plan the payments because see, sometimes what happens, if I'll share some of the guidelines also, you can share with the audience later on, that there is a one circular or clarification about from the MSMED authority that they are providing registration on the basis of turnover or investment figures of the earlier years. Say for example, for the financial year 2021, they have considered the figure of financial year 18-19, and that is they have announced through the official circular that I already have that circular. So they are considering the figures of the earlier years. On that basis, they are providing registration. So you can't presume with the current year figure, even in case if supplier will give you the figure that you can identify that we are small enterprise or medium enterprise, even though there is nothing written on the certificate, but category may change year to year. So at every time you need to ask to the supplier that whether you are falling under category of small enterprise or micro enterprise as on date or not. That from my point of view, it is mandatory. You need to ask always at each and every supply, not at the year end, because it may be possible that in the beginning the supplier may be micro enterprise, but later on turnover may increase or investment may increase and the category will get changed. So that time what happens, you will be in the impression that he is a micro and will get the deduction, and later on you will be in that difficult phase that you will won't get the deduction. So I always advise you need to ask at the time of supply.
Okay. How we can check whether a supplier is registered under MSME or not in case he is not responding to us? So where and how we can check this?
Yes, in that case, what you can do, first of all, you need to now onwards. I have seen in many cases that most of the micro or small enterprises mentioning that registration number on their invoice itself. So basically, you can check the number from the invoice and you can cross check same number with the website. It is available. That tool is available on the website. If you have that number, that whether it is correct or not. The second option, if they are not providing anything regarding the registration, then you should always assume with some confirmation or clarification from the supplier through writing, that through email or through post letter, whatever you feel free, you feel convenient, that they have to provide the registration evidence or something to get the benefit of the early payment, because it is the beneficial provision for the supplier basically to get the payments early. And if they are not providing anything, then it is not always your liability, but just to get the deduction, even you make to ensure that they are falling under this category, or you have make at least some efforts to identify the category of the supplier. So the best way at last is to get the confirmation or at least to make some communication, and they are not responding, then you can assume that they are not registered and that's why you have not made payment within that 15 or 45 days, and you can take that liberty also. I have also prepared one or two that format about getting confirmations, that you should ask this much details, that if I can share at the moment. See, are you able to see?
Yes, sir.
See, this is the declaration. This kind of declaration you can take, that I or we hereby affirm that currently we are not registered enterprise.
So we are not able to see this. We are just your folder is visible only.
Just a moment.
So else you can share and we'll be sharing it to all the participants.
Yeah, that can be possible. If I can share later on after session.
Yes, sir. We'll share with the participants.
So basically, it's a standard format that we need to obtain declaration in that format from the supplier, that whether they are registered or not, and we can rely always on that confirmation of the supplier in such cases.
Okay. So that's all the questions we had from our members. So moving ahead, thank you so much, sir, for such a great session and answering to all our questions. It would be very helpful for us. I'm very sure for the upcoming return filing period, just a month away with us. So thank you so much for your time and for sharing your knowledge with us.
My pleasure. Thank you very much to all of you. Thank you very much.
At last, I would like to thank all our participants for joining us for today's session. Chairman sir, Vice Chairman sir, the technical support team, and the faculties as well for sharing their view with us and giving us a lot of knowledge today. Thank you so much, everybody. Good day.
Thank you.